Institutional money continues to pour into Bitcoin, even though we're right at the top. But why are we not mooning yet? Hello and welcome back. Over the last 24 hours, we have seen some of the most stunning inflows into the spot Bitcoin ETFs that we've ever seen before. That's taken them to unprecedented levels. We've also seen a Fed rate cut. All of that might leave you perhaps somewhat disappointed that we haven't seen a more spectacular move to the upside with Bitcoin. Let's get right into it and break it down. So BTC currently sitting at a price of $76,408. We've broken all-time highs twice today, once back at 8 p.m. and then further just a couple of hours ago at 7:30 p.m. As you can see, the trend clearly since a couple of days ago, since the news came out about Donald Trump winning the US presidential election, has been upwards, although perhaps not quite so aggressively as some might have been expecting. I think we can put this down to two main reasons. First, I think a lot of people were long going into the election. I think a lot of people got long as the news started coming out, and I think a lot of those longs were on leverage. We certainly saw that in the liquidation risk in the market. And I think a lot of those people are potentially taking profits on short-term trades. I think the second reason is we're still pretty early into the new world of Trump as president and what that actually means for the crypto industry, what that actually means for Bitcoin. Sure, we've seen quite a lot of, we'll say, general political world news type activity since Trump took the win, but we haven't seen a great deal of crypto specific or market specific news in terms of policy changes, etc. From a price action perspective, this still looks perfectly healthy to me. At least there's no reason to be bearish yet. Of course, the trend is up. Pullbacks are getting bought up. Pullbacks aren't particularly aggressive, and things just seem to be chugging away to the upside. As I said before, 2 breaks of all-time highs today. Nothing to be particularly bearish about there. And further to that, looking over at the daily chart, it looks like in a few hours we're going to close the 3rd daily candle above the former all-time high. If you watched yesterday's video, you will know that I got long, leveraged long, around about the all-time highs then, back on the 6th. And I'm still in that position because of what I just mentioned. There's nothing particularly to put me off or make me feel bearish at this stage. I'll show you the position now. Trading on BTC C10X leverage, that is a 1 BTC size position, again leverage 10X, and we are currently up just over $3,000. So the trade is still in profit even though we bought the all-time high. Like I said yesterday, the rationale for that was I feel that this is a historic all-time high. I was already in the trade from lower down, so technically speaking my average entry price to that trade wasn't the all-time high. The average entry price for that is about $73,400. If that term is unfamiliar to you, what that means is I entered the first part of the position at a much lower price and I entered the second part of that position at a much higher price. Therefore, the average of those two is the current average entry price for this trade. And my stop loss remains just a little bit lower than the invalidation for this trade, which is $72,738. That is the low after the initial pullback from that news-driven impulse move after the Trump win for the US presidential election. So all that being as it is, the risk for this trade is very small. And then on top of that, the risk for my whole portfolio is very small because of the portion of the portfolio that is allocated to short-term trades like this, that is allocated to that trading account. As I've said before, I see no good reason for keeping any significant portion of your portfolio on an exchange. The bulk of a crypto portfolio should live off exchange in cold storage, in my opinion. And I still believe that the trade idea for this position remains valid. We're still making new highs. We're still trending upwards. And as I say, my invalidation remains this low here. A break below that, in my opinion, would likely see moves significantly lower to the point where there's just more opportunity to be had lower down the book. I think if we were to break this low, it's more than likely that we would retrace most or the majority of that news-driven impulse move from the Trump presidential election win. And in that case, there's just more opportunity to be had at lower prices. Also, from my point of view, for accumulating Bitcoin, adding Bitcoin to the core portfolio, that would make more sense on a dip. And I think if we see the kind of explosive move to the upside that we're hoping for, that we're expecting somewhat, then it's likely that the relief move back down again after that would be a better opportunity to seriously add to the portfolio. But as always, that's just my opinion. That's just what I'm looking at. Also, a lot more opportunity to be had in terms of upside in the medium to short term in other smaller cap altcoins, which are likely to enjoy a lot of upside if we see more upside to Bitcoin, and because of all the new money that's likely to come into the market as a result of that. At least that's the way this has played out in past cycles. I've drawn on 2 orange lines here on the chart, and what I've been following here is leverage in the market. This line was actually drawn in yesterday. This marked around $890 million worth of liquidations that were sitting up here at $77,000. Now, when I drew this line, we were down at lower prices, okay? I think we were down here somewhere around 75.7. The reason I've left that on the chart is to illustrate how that can move and that can change, right? The presumption when we look at liquidations is an instantaneous move to that level would result in liquidations, or an instantaneous move beyond that level would result in liquidations, in this case short liquidations. So traders who have bought into the market in short positions being forced to sell those positions, but because it's a short position, that results in buying pressure on the market, and that results in a rapid demand on the market. Therefore prices go up very rapidly from that point. The reason I've left this in here kind of as a legacy is as a reminder that can all change, okay? So whenever we're looking at those liquidation levels, we are looking at the result of an instantaneous move to that level. And most importantly, those positions don't have to stay in there just because they were in there, right? People can get out of those positions as the price comes up closer to them to avoid being liquidated. And that's kind of what we saw here, okay? Although interestingly enough, that did mark the new all-time high at that point at $77,000. So let's get rid of that for now, because the new level that we're looking out for to the upside is here, 77,730. So that currently marks just north of $900 million worth of short liquidations. If we go up the book a little bit further, the curve kind of flattens out around about $1.2 billion, and that is up at $78,000 BTC USD price. So any kind of rapid price movement up through these levels, if we get there quickly enough that those short positions can't get out of the way in time, they can't unwind without becoming liquidated, that's when we could start seeing really dramatic price movements to the upside. Whether or not that will last is to be seen. My target for this initial move is going to be $80,000 because it's a round number. The market likes round numbers and it tends to gravitate towards round numbers, particularly when in price discovery, because there is no previous price action for the price to kind of anchor itself towards. Now that theme of leverage getting out of the way, you can see this reflected in total liquidations. So as you can see over the last 24 hours, we're kind of balanced long and short at around about $100 million. That's kind of nothing in the market right now. 12 hours around about 64.76, 4 hours 11.11. Nothing terribly significant, and I think that is a good thing. And you can kind of rationalize that with the way the market's moving. Okay, it's not been particularly volatile over the last couple of days. One thing to watch out for is the market is technically greedy. I think that makes sense though. It makes perfect sense. We are at new all-time highs. Clearly, there's not a lot of people selling, but there are a lot of people buying. Look over here at the ETF flows. So on the 7th of November, today, we saw a historic net inflow of $1,373.8 million into the spot Bitcoin ETFs. That is $1.3 billion net inflows in one single day. And maybe even more shocking is that over $1 billion worth of that, $1,119.9 million worth of those inflows went straight to the Blackrock IBIT iShares spot Bitcoin ETF. As we know, Blackrock is adding shares of that ETF to its own funds. That means they could well be buying this themselves, or it could be their clients, probably a combination of the above. But nevertheless, that is absolutely staggering. And that also means for the first time ever, BlackRock's Bitcoin ETF is worth more money than BlackRock's own gold ETF. Today, I think for that reason, is a moment in time that will be remembered for many, many years to come. The day that BlackRock's Bitcoin ETF flipped their gold ETF. And again, whether or not that is BlackRock themselves buying, whether or not the majority of that is BlackRock's clients buying, these are still institutional grade investors getting exposure to the Bitcoin market without buying the underlying asset. That's why they're buying the ETF. And to see that kind of buying while we're at these historic all-time highs is absolutely staggering. And that gives me more confidence for this trade. It gives me more confidence for the continuation of this move. Now, we also saw a rate cut decision today. It was 25 basis points. We knew the expectation for that was 97.8%, so no surprises there. S&P up on the day, some 0.5%. That 25 basis point rate cut was right on the money in terms of what was expected of the Fed. And looking forward, that leaves us with a 65% chance of another 25 basis point rate cut at the next meeting on the 18th of December. And that is the same expectation that we had going into this meeting. So not much has changed there particularly. This is bullish news, but it's not surprisingly bullish news. And when Fed Chair Powell was asked if he was going to leave, if he was asked to by Donald Trump, this is what he had to say about that.
President-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
No. That's it. That's all we've got.
Michael McKee from Bloomberg Radio and Television.
That's all he's got to say on that. Just a simple no. I think it's quite clear that the question touched a sore spot there. In any case, not market moving, but still relevant. So, I mean, the story there with FOMC is pretty much as expected. It's not bad news. It's good news, but it's not particularly exciting good news. And that's kind of the story of the market right now. I mean, look, new all-time highs. There's no reason to be disappointed with that. It's not an absolutely shocking move straight to the moon, but the buying is there. The buying is clearly there with the institutions, and long may it last. I think the only thing to watch out to the downside is still liquidations, long liquidation risk. There are a lot of people leveraged long right now. You can see the danger level where the curve kind of flattens out is around $2.4 billion worth of leveraged long positions at $74,300. But once again, there's clearly a bid in the market. You can see it in the chart. You can see it in the ETFs. You can also see it in the order book. The way that is characterized is by this slightly thicker profile to the bid side of the order book than we've got to the ask side of the order book. That is to say, there is somewhat deeper liquidity for buyers than there is for sellers right now. A sort of lingering spot bid in the market. It all seems to be plain sailing for now. We've got lower interest rates. That means there's more likelihood of investors putting their money into risk assets like the stock market, like Bitcoin. We can see very, very big whale buys coming in on the institutional front. We can see that via the ETFs, and the chart is still printing new all-time highs. Bullish until proven otherwise. But as always, that is not financial advice. That is just my opinion. Thank you so much for watching. I really appreciate it. There's plenty more to come. Catch you in the next one. Bye.